Okay, hello everyone. Welcome to Market Trends. I am David Russell, Global Head of Market Strategy at TradeStation. It is great to be with everyone. I'm going to start off some disclosures here. I want to also remind you if you go to the TradeStation website and then you go to the Insights button at the top, it will bring you to our blog. And on the blog, we have um, some information for today's webinar. I prepared a lot of it last night before a lot of the price action today. So we're going to just kind of review and catch up because it is one of those really big days. Obviously, a lot of things happening with this big rally in Nvidia. And in many ways, it's one of these things where we can now start thinking about what is next or opportunities might be coming along. So we go to tradestation.com and we want to start out here, go to insights right here. And then if you go to um, this year range reforming after big events. Now we broke through the top of this range, and in my view, there was an important level on the S&P 500 at 50.30, and that was the case last night. And we are now above it. So this analysis now is not really terribly relevant. There's a few important things in it, but there was a range here. And there was the potential. The thing I had been kind of positioning, not positioning, but kind of anticipating was if there had been any kind of difficult news, then we could kind of chop in this range. But given the strength of these earnings we saw last night, that whole thing is now kind of different. It's important to have lines like this because then when you actually see a breakout, all right, that last idea is valid or it's not valid. In this case, it's not. So we're moving on from it. I just want to tell you that. Now, I'm sure very quickly by showing you these standardized returns of ETFs as I go to some of the important stuff here about Nvidia. And I'm not going to go through all the numbers and stuff. A lot of that stuff is now history. But I think what's interesting is there could be some things on the options front that stand out and some different ways that some opportunities that might be popping up in some of these other AI names that I wanted to start with very quickly. So now you see that. Let me go over here to Option Station Pro and look at NVDA. Now, we have our chart here. Let's look at this chart and I'll do NVDA. And basically here, obviously, with this dramatic rally, the question now is what can people do with something like this? And if you're looking at simply being long or something, owning shares or looking for calls after a move like this in this very short term sort of situation, people may find that the risk reward is not hugely favorable. But there are other potential things that people might look to do, and that's why sometimes you can kind of turn the tables a little bit with options and actually think about things like put credit spread. So here we have our Option Station Pro for Nvidia, and what I'm doing is I'm now looking here at the month. Let's actually look at the weekly options expiring on March 1st, 8 days out. And this is something that people could potentially look at when you have a name that has run a lot. People might not think about this. When a name rallies sharply, very often one of the ways that you can position for it using options are by selling put spreads. Because the thing is that paying for something that's up a lot that might be extended. What can happen is that premium just disappears on you. It sits, it consolidates, and in a case like this, when the move is very much has happened, um, you know, instead of paying for a move, you can get paid by thinking about something like a put credit spread. So the one that kind of jumped out to me, I want to very quickly mention here with Nvidia is when you see a stock up with this out in this kind of peak around 750 is a psychological number. It's a little bit above the previous high, but a person, for example, might want to go here in the Option Station Pro and go to this strike. And what a person could do is they could just go to the 750 puts on March 1st. They could hold down the control button on the bid, and that's going to, represent selling. And then they could go to something like the 740s, and they could hold down the control on the ask, and you'll see that's a $10 wide spread, and the value of it would be 338. So basically, in that case, a person could receive $3.38 per share, and as long as it stays above 750, they'll collect it. If it goes under 750, then they can get assigned shares for 750. But remembering the fact that they already collected 335, which would then essentially engineer a potential entry on the stock under 747. That would be 750 minus this credit. And it's a way that a person can still have some opportunity. Say something happens, and it kind of takes a dive down. you could get assigned shares at a spot that is several percent below where it currently is. Or if it keeps going higher, or if it just sits here, then you keep that credit and you move on. It's 8 days away, and in many ways with options, this is the kind of sweet spot in terms of options decaying and losing value. And I want to mention that because this is when something like a credit spread can make some sense on the put side. So another one that jumped out to me, I want to just very quickly mention this. I have an intraday chart here of Microsoft. This is like a 1 minute chart because I was looking at it. But let's look first. This is the trading view very quickly. I just wanted to show you here on trading view. But what's interesting about Microsoft is, it kind of it's been just kind of moving sideways. Had this earnings report. It was very kind of had been, really had gotten ahead of itself and it's just moving sideways now. But what's interesting is we now have this gap that people might look for. And from my perspective here, right now with Microsoft, and I'm going to go to a 15-minute very quickly. If you look, this is a daily close right around here back on the 14th. And look how we're holding that on a short intraday level with this kind of gap here. The NASDAQ, is pushing toward highs. The S&P is at a new all-time high. Microsoft is not. The AI news that we get out of Nvidia is very much compatible with Microsoft doing well. So I wanted to just kind of mention that because in this case, we're in a situation where it's an AI name. It has some technical short-term reasons, just kind of chop and pause, but that is over. Nvidia is, kind of confirming the narrative, and a name like Microsoft here kind of grabbed my eye. And most interesting to me is if we look at even now, if we look in the other way on a call spread, because this is something where maybe in the short term, it does have that move. If you look for something like Microsoft now, MSFT, we're looking at the same expiration the 1st of March. Now we're going to flip over to the calls. And what I can just do is, we're looking at here a level of Microsoft, a move back maybe to these old highs. And we looked around a level where a spread, look at a person could potentially, for a name like Microsoft, something like the 415, 420 call spread. You could click on the ask, because in this case, if a person is buying, they're going to click on the ask, and then they're going to hold down the control and click on the bid here, and that spread is about $1.50, which is a little bit better than a 3-to-1 potential risk reward. That's a potential way someone might look to leverage something like that, and that is kind of based on the idea of it holding that very short-term intraday high, and the fact that overall there's nothing in this market now that kind of undermines any of this narrative toward AI. If anything, it simply augments it. So I'm going to go through some of these other things. I want to also just mention is that one of the things I'm kind of watching here quickly is what's happening in energy and crude oil. In fact, first, let me just quickly look at the S&P. I want to just show you a few things at the index here I think are important. We've been holding the 21-day exponential moving average, and we had done comparisons back to 1995. And we've talked about how we had this RSI just staying above 50, consistently hitting overbought without retreating down much, holding the rising 21-day exponential. And in many cases now, this is just another iteration of that trend repeating itself. And, this level for me, my thoughts had been that there was potential of us kind of stalling around this 50-30 level and chopping for a while down toward down toward this weekly close around 49.18. And the reason that was something that struck me as a possibility was the fact that after the Nvidia news, there's a lot fewer catalysts, and then we start getting toward the macro events of things involving the Federal Reserve and inflation and stuff like that. And Jerome Powell is going to be in Congress next month. There's certain things like that that could be potentially a little bit not so bullish. And we had some inflation numbers recently that were not terrific. So the thing is that if a person was looking for a pause, those things could have kicked in. They didn't kick in, but I think you always have to be kind of thinking one way or another when you're viewing something as a trader. The fact is that the run that we've had recently is historic. I think we're up 13 in the last 15 weeks or something like that. That is one of the most consistent runs in all of history. We're looking at a market now that is behaving very similarly to 1995 at the beginning of the bull run in technology stocks. People are now starting to say that. They're saying Nvidia is doing what Cisco Systems did then. If you look back at Cisco, it outperformed everybody. And if you just go back and look, I mean, that thing was a monster, because as people built the internet, they were putting in those routers and using them everywhere. So anyway, this these technicals are very similar to what we're seeing. This RSI holding this rising pattern. I also want to mention here, we go to the MT breadth workspace. This is included in the zip file. So let me just show you here. I should mention, if we go over here to the actual article I have, you can go to this and it has downloads. In the downloads is a zip file. Make sure you can see that. And the zip file has a series of ELDs in it, and then it also has workspaces. I've explained this before, and basically there's a few things here that are interesting though. And I think that one of the things that I have been kind of trying to anticipate and trying to kind of see what will come next, and everyone's been talking about this potential for some kind of move toward smaller caps or broader market, and obviously none of it's happened significantly. But what's interesting is that after Nvidia, there are going to be fewer catalysts for the mega cap stocks, and there could be more of that potential for a broadening of the rally. What is interesting here is we are seeing the advanced decline line hitting new highs today. So it's kind of confirming, if you look back to other moments in the bull market, this was really not confirmed by the advanced decline line. We did not see great participation back at this period of time in the first half of January. It wasn't bad, but it wasn't like really broad. But now if we actually look, we're seeing more companies. These are S&P members hitting 52-week highs. Today we're recently seeing that kind of hold back above 70. We're also seeing, and there's an indicator I looked at a lot last year, was the number of companies above the 20-day versus above the 50-day. And that's what we're seeing down here in these two lines. And we have found in the past that that was an interesting sort of signal for market breadth, and it did give some interesting signals last year. Like I said, it has not worked for about 6 months. However, it might start to work again. Now, these are some of the things we have included on the breadth, MT breadth workspace in the zip file that we provide here. And but in everything now, we are seeing just like very strong breadth, and there's just not a lot of any kind of real signals in any sort of weakening here. Um, so that's the overall market. Now I wanted to look at some individual names that have been kind of popping up because I'm just kind of scanning around and looking for stuff. I want to mention crude oil. I'm going to go with my MT main. Crude oil today had it's on pace for its highest closing price since November. You can see this close. If it closes this level, it'll be the highest close since November 6th. So from my perspective here, as I looked at the things that could be kind of next, given the strong economic news and other things like that, I am watching for a potential rally in energy stocks. We had talked last week as we were doing the webinar, we had this kind of big, kind of bullish outside day in the energy ETF. Actually, it wasn't an outside day, but it was like this big kind of inexplicable surge for no good reason. And usually when things rally for no good reason, that's actually an interesting bullish pattern because it actually tells you that there's simply no more sellers and there's a potential of the demand exceeding supply of the shares. And so I want to also mention here, I am watching ExxonMobil because ExxonMobil trades a lot of options and it is on pace here, to kind of have its highest close of the calendar year. It could actually have its highest close since back here in early November. So I think right now the energy stocks are in a very tight pattern, and something like ExxonMobil trades a lot of options. It might have the opportunity. Now, remember, on market trends, we're looking to identify the things that are, potential for opportunities in the coming week or so. Nvidia, like I said, that is something that has now moved. We were talking about it was coming up because of the timing of our webinar on Thursdays. It wasn't something we could do very much with on Thursday afternoons. So now we're kind of looking out toward those things that are coming next, and there are some other stories kind of boiling under the surface in energy that I'm going to mention. The other big one that jumped out to me, and I already showed you the standardized returns of the ETFs, so I can now show you XBI, the biotechnology ETF, has an interesting high basing pattern here. We were talking last week about some different biotech stocks, and they're kind of moving. It's interesting that the XBI to see this sort of pattern. If you look at this, I mean, this has actually been depressed for a long time. Now, what's interesting at XBI is one of the big things that hit XBI here was the kind of carnage in Moderna. But what's interesting today is that Moderna is actually showing some very interesting price action and had an interesting reaction to news. So what's interesting to me here, I mean, Moderna itself is, I mean, this is not, I mean, who really knows when you look at this chart? There's million things here. But what's interesting is if Moderna stops being really bearish, it's a big part of this XBI. And this is something that when you see this kind of breakout of this high basing pattern in an area that has had M&A, there is the narrative of these different things happening with weight loss drugs and things like this. I think this is a part of the market also that might start to get attention when you look at the fact that it basically rallied back to these highs, spent about a month and a half consolidating essentially between 86 and kind of 94. And here it is now pushing up toward these levels. I think this is one here that could, see it, this could be something here where it could kind of um, just today's close alone, if it closes at this level, there could be new money starting to enter based on this. If you look at it on a weekly chart, which I'm not going to pull up right now, but essentially on a weekly basis, this is going to be a significant close if it holds this, and this could start getting some attention. So energy and biotechnology. Another stock, and I just want to mention this one because it popped up. I don't know that much about it. PEGA. They do some kind of like customer service enterprise software, but they have an AI aspect. They had a strong earnings report, something overbought here. This one just popped up on my radar because it was hitting new highs. I don't know that much about it. It's a relatively small company. But the one thing I'll say is that in this market, there seems to be a trend of looking for these sort of companies that are those kinds of those mid to big. And it's like these are the names like the Mongo databases and um, the Cadence Designs and these kind of companies that are the next going from that kind of in many ways what Palo Alto Networks was. You look for these companies that are established enough that they're real companies, but they're also not Microsoft. They're not that level. And these in a market like this, these are the kind of companies that can really potentially outperform over a period of months and quarters because they're in that kind of sweet spot of secular growth, but they're also not that big yet, which means that they have significant growth in terms of their business and also significant growth in terms of investors knowing about them, getting added to indexes, picking up analyst coverage, potential M&A interest, all those sort of things in this kind of market with this widening breadth. And I've been saying that there is the potential this year. The first names we talked about were names like Palo Alto Networks, Uber, and Airbnb, and two of those got added to the S&P 500, and actually all three did. So I mean, the thing is that this is now something to be thinking about, and Pega is potentially a name on that list. Now, in a different light, actually, all right, I'm gonna have a few here that popped up. I did a scan right before the webinar, and I'm going to show you some stuff here. Now, this is a different sort of thing, but Williams Sonoma has some significant short interest. We talked about some of these retail names before, but here it is holding above this 52-week high, from back last month. This is, I think, another area where we've seen. I'm going to get to this, but there's a lot of strong economic data, good claims today. Some people revising growth for the economy to a more positive direction. And for consumer discretionaries and retailers and stuff like that, that's interesting. And I think we have to remember that the retail stocks have absolutely been through a meat grinder and purgatory for the last decade. And if we come into a strong cyclical economy with strong consumer spending into the summer and things like that, these guys are now lean and mean. They've cut stores, they've cut inventories, and they're in that spot where they can potentially benefit. And I think right now in these traditional retailers, some of them have had significant moves. And a name like Williams Sonoma is also kind of on the radar. And it's interesting because they report earnings in about 3 weeks, 4 weeks, and that might also be something that kind of gives some momentum. Now, in the overall tech space, I was doing some scans and I noticed, Western Digital had this kind of pullback. When you see it kind of bounce off the 50-day like this could be something that, people might look for some consolidation here for a little bit, but this might be something that over the next week or so could give some potential opportunities. Another one that popped up on my list was this is a tech name that I've seen this Solar Winds, SWI, had a strong earnings report, pulled back. This one popped up because it hit the bottom of the Keltner channel. I may show you that scan again. Guys, I do a lot of these scans based on bullish intermediate term trends, and then you get that short-term pullback using the Keltner pullback tool that we have coded on the TradeStation platform, and we've shared with you in the ELDs. But SWI pulling back here. Another name, and it's interesting. I've been recently trying to work a little bit with some a little bit of software stuff, and I've been learning a little bit about GitHub and some of the different things that people do. But GitLab, GTLB, and the thing is that with a rush toward people scaling AI and software in general, a company like this was involved in tools for software developers. Probably also in a secular growth area, had a strong earnings report right here, and basically here it is rallying, kind of holds that level, hits that 50-day, comes right back. GTLB, not actively traded, not a lot of options, but an interesting sort of name that appears to be in a trend. Now, a name that's more active that had good earnings also recently is IBM. Pulls back, has this false breakdown, goes down just to the bottom of the Keltner channel, just teases that 21-day exponential and holds. IBM was a name here that really had done well recently in that last earnings report, and it's obviously another one of these companies where they have such a large footprint. If they can start adding, new businesses and things like AI, the opportunity for a name like this is, potentially significant. Remember, new products typically have higher margins. So if a company rolls out a new product, it's going to likely be more profitable. And and the best thing a company can do typically is add new products or higher margin products on existing customers, because there's a cost to acquire a customer. If you can get a customer, if you can start making more money from the same customers, that is the best thing that a business can do. And it's interesting, in many ways, that's what Netflix did recently. They had people who used to basically steal their service, and then those people are now being converted into people who are watching the ads or are paying for the subscription. So you're basically changing your users into being better monetized. And I just want to point that out. This is something that doesn't matter what industry you're in. This is just a general principle of business. I'm not going to get into it this time, but we always talk about these principles of why companies move. And one of the key things is margins. When you see something that can drive margins, like new products, that is, a key thing. And the thing about new products is typically if a management team is smart, they're not going to roll out a new product that has lower margins. They're going to roll out products that are going to increase their profit margins. Um, just another name. And I mean, the thing is, this market is so full of opportunities. This is AJ Gallagher, AJG. Now, this one, I'm not sure what scan I used to find this one. But the thing about AJ Gallagher is that insurance stocks, I mean, probably most of these people realize at some point, if you've renewed your auto and your home insurance, you're paying more. If you look at CPI, we're paying more for insurance now. So it's kind of like, if you can't beat them, join them. Some of these insurance stocks, TRV, I mean, Travelers has been, I mean, it's amazing the move in Travelers. I mean, this stock has gone crazy, and this is historically one of the most boring stocks in the world, and it's really flying. So AJ Gallagher is a long-term kind of performer also in the insurance space. But what's interesting about this is it had a drop here for no good reason. It was just people rotating away from safety and into I'm not sure what it was, but this is something when one day they just dumped the insurance stocks for no reason, and then they started buying tech stocks or something at this time in December. And that sometimes happens. A company like this hits a new high, kind of stalls, and then hits an air pocket. But now it's consolidated, and I want to just point this out because this is also a name that is in a longer term uptrend. And the if you look at it historically, I mean, this thing has been in a longer term uptrend, and in many ways, it's gone nowhere for a few months, and it has some interesting, fundamental things happening. Arista Networks. Now, this was one that basically just had your classic overbought euphoria before earnings. Everything about the earnings were solid. They sold it anyway. And it kind of had that period of time when it chopped for a while. But now it's kind of, look, it went down. All these things, it's amazing to me how it hits that Keltner channel. And once it kind of hits that level, we're seeing a lot of these patterns. It dives, doesn't hold the downside. It comes flying back. And then often that kind of pattern, it's called a kicker. This is actually kind of a kicker. Not, it's just more or less a kicker candle that we see on this one here. And it's when you get a false kind of breakdown, when you get a deep low that just is not followed through, and it comes roaring back. And so Arista is an interesting one as well. It's just in a secular uptrend. And look at Microsoft. Look, it has that gap, right? It's similar to Microsoft. It has this space up here. Rallied hard, was overbought, and then it has space. It's also, this is also one that I think I found this one today because it was hitting the 21-day exponential moving average. In fact, let me show you how to do that. Go to MA Tools. We're going to bring in our S&P 500. Remember, this is some of the things we have built into this platform here. Yeah, let's just quickly show you. If you look at key ETFs, this is the way we often kind of start out looking at the market. And what's interesting here is that if you look on like a 1-day basis, you can see tech is really crushing it. Semiconductors are really crushing here. But if you look over time here, this allows you to compare. And I think today is actually not a day that is hugely useful to be necessarily comparing different relative strengths, because this is just one of those days. It's like when Nvidia had that massive gap last spring, when it's like there's just days that are historic. And in many ways, this is one of those. And I'll tell you, there were days like this in the 90s, if you go back and you look. I mean, the similarities, I don't know how old most of you guys are, but I mean, I got involved in the market in 2000, right after the tech bubble ended. But in that time, I would go back and look at the sort of history. 'Cause I worked at Bloomberg at the time. I could read old articles and look at the old price action. It's interesting to see that. And in many ways, like we're in a market now that has more of that sort of phenomenon in it. And in many ways, don't forget that the bull market of the late 90s, that followed a slow and steady bull market preceding 1994. Coming out of 87 crash up to 94 was a slow, steady ascent, and then it accelerated. So in many ways, there's a lot of parallels to that time, because we have that same sort of thing. We had a steady ascent in many ways, coming out of COVID or coming out of the trade war with China, however you want to look at it. And then we had the kind of inflation scare, the bear market or the inflation, all that stuff. And now we're accelerating out of that soft landing. So the similarities are out there. So I just want to mention, it is interesting that we still see on a trailing sort of 1 week basis, energy remains the top performing sector. And so I think it's interesting. I like to look at this because sometimes you'll see a sector that surprises you. And yeah, we have a big news event in tech today. But the thing is that in some ways, news events can get faded. And it's not to say there's anything bearish about tech, but the question is, for the next 3, 4, 5 days, does tech continue? Or does energy sneak higher? Does biotech sneak higher as everyone is obsessing over Nvidia? And that's the reason why we kind of had that idea, looking at the possibility of someone doing something like selling a put credit spread instead of chasing and paying out for the upside calls. Okay. On Nvidia, AJ Gallagher. Let me just look at my list here. Sorry, Arista. I want to mention Win Oops, wait. WYNN. Win Resorts. They have this exposure to China and stuff. But what's interesting is that there is sign that the long, kind of coma in the Macau gaming. It's been like this long winter. There's evidence that it's ending. And here's also another company that had this good earnings report. I want to just mention this. I'm not sure exactly about a name like this, but again, if we do see that rotation toward more broad names in the next week, I'm not talking like immediately right now, but if we start to see that, a name like Win here with this rally kind of holding might kind of catch some attention. Now another chip name that really hasn't done much today has been On Semi. Now, On Semi here, if you look at it, this company has a lot of exposure to the automotive space. And they obviously had some, bad gap here, but then this was a bullish gap. Now, when you look at the overall strength in semiconductors and this name being relatively dead, what's interesting though is that the auto industry it's just doing fine. I mean, they've gone through a lot of they've kind of weathered a lot of the different storm here. And remember, strong economy, something like autos. The other thing is that this is something we talked about years ago, is that the average age of American vehicles is pretty old, and people have been talking about the structural need for a wave of auto replacements in the coming years. So I think there is a sort of pent up demand in autos. And what's interesting, and I think it's important to think about, is that it's this traditional old American economy, houses and cars and stuff like that. Well, you think about it, there is a shortage essentially of houses and of cars, and those are two structural things that can actually drive significant economic demand and growth. And the thing is, with people's debt to income having improved, those things can both kind of benefit if we continue to see a strong economy. So the other thing also on semi, it's pretty interesting is you're this falling, you can kind of see it here. There's a falling trend line. And let's see if this thing maybe kind of breaks out through that trend line. It's kind of interesting to see that. Now, I do want to mention, um, I meant to do this earlier, but I gotta just say the weakness in names like Apple here is kind of deafening. I mean, Apple is nowhere near its high. It's just, it's holding 180. We had kind of done a chart analysis and we identified 180 as a level that might need to be revisited. And I think it's interesting here just to kind of see this sort of moribund activity in Apple. Um, and at this point, actually, now holding 180, people might look for this thing to be 180 to 195. Now, I hadn't thought about it here, but let's look at Apple. Maybe Apple's that sort of spot now where 180 on the put spreads, people might be looking for something like that. Holding 180, these premiums don't look that great to me. Well, see, it's pretty high above that now. But anyway, this is something where people could be looking for levels like this. Now it's kind of had its bounce, but we had been talking about 180. So if you actually go back to our blog post here, and you look, we can see our trading view ideas. We've been talking about Apple for a while, going down and hitting that 180 level, and yeah, you can find it here. I'm not sure where I did it, but anyway, um, we had talked about Apple going down and hitting 180, and that's the sort of thing where if people have been kind of thinking about it, setting price alerts and looking for that level, that's the sort of opportunity could have been there. Another thing that's interesting to me also is just the weakness in Tesla, and again, there's nothing here that we had kind of said there was this risk of it having a stab up to these levels, and it did, and now I think the next thing is if there is much weakness at some point, if the market kind of pauses or pulls back, Tesla could just struggle here. And we could just see a situation where Tesla just kind of sits, gets stuck under these levels, under this bearish gap, maybe just sits and nothing. And then when the market does start to weaken or pull back, then this thing does really start to have trouble. And there's some interesting news this week also in Tesla I'm going to get to. Um, just two others I want to mention is Corning, GLW, is another one of these tech stocks that had a strong earnings report, kind of pulled back, and it's kind of trying to fight its way higher. I wanted to mention this name because it's not on a lot of people's radar. However, it is one of these stocks that strong economic growth, general things involving technology and industrial expansion, and just general economic activity. They do fiber optics, and they had this strong earnings report. It's interesting to look at how it's really gone nowhere for a while. But it also, something is falling downtrend that it also is trying to break. It's more just on my list. And the other one I want to mention is Amgen. We had talked about this one a while back. The reaction to the earnings report was extremely negative, but this is one here where it's coming down and maybe trying to hold some levels from back here in October. And I think this is one that we want to watch in the next week or two. Right now, the short term remains highly bearish in it, but this is something also where it is, the people could potentially make the case that there was an overreaction to the downside in this name. And so, it's interesting to look in weekly time frames, as I say, like it's had a few weeks to the downside, and maybe as we move into next week, people will be thinking the other way. All right, so I'm going to zip through some articles now because a lot of these articles basically back up the things that I've been saying. But before I do that, let me actually look at my long-term chart of the S&P 500. This is on TradingView. Let me just show you this. Remember, I've looked at this from different times, and we can actually get rid of this now. What we had said was the market has these periods of 18 to 24 months of sideways movements with a breakout, and that's what we now got. So now we had this one. This one, I guess, if we want to draw the whole thing out, we can say the breakout was right here. So we can basically say that that's pretty much it. It was 102 weeks, roughly, almost 2 years. But I want to just point out this channel because I do think that people. I mean, the thing is that the highest target I'm aware of is around 5,400 right now in the S&P, but I think we have to just realize that if this channel is it's there and it's pointing to 5,900 potentially. And now if we look back historically, like I said, if you look back to 2005, I'm sorry, 1995, it was right there. And then you basically had this channel that started, early in the Reagan years, and it had this long uptrend. And then, so in some ways, you could say that we're currently right around here. I mean, maybe around there or something. So I do think it's just interesting to realize that It's not quite the same because that one had less movement before. It just moved sideways before. But I think it's also as you realize that this channel, it actually gives a lot of room to the upside. And the fact is on the weekly chart here, when you have this breakout, and one of the things I've emphasized is that when you have a breakout like this, do not you historically do not get significant pullbacks until, for several months after a breakout of this nature. And that's why we're not going back down to test 4,800. It's why we keep finding higher support at higher levels. And if you look at this, it's like up 6, 8 weeks, down one, up 5 weeks, down one. And maybe that's just that's maybe our life now. Maybe that's what you got to live with. Like it or not, you're not going to get the big pullback. Deal with it. And that's, I think, kind of what the market's telling you now. It's saying this is your life. It is 4 weeks up, 1 week down. Recognize the trend. Don't argue with it. And it's gonna, people try and get bearish, they try and get skittish, and then denied. Sellers get punished in a bull market. And I think that's important to realize, and that was, you always want to be cautious. And that's why I identified some, potential levels where things might stall. And then what happened? It came right through those. So, you have to manage, you have to, on one hand, balance caution with also recognizing that the nature of this trend we are in is one of the most significant and bullish patterns and breakouts, I believe, in the history of the stock market, at least in the last 100 years. I believe it is similar to 1995. We've talked about all those patterns, and that was a very steady uptrend. And this price action today just seems to continue that pattern. All right, so let's just look through some of these things I want to mention here. I thought it was just interesting here that the accelerated computing and generative AI. It's just some articles, Nvidia, but it goes through it. It says it's hitting a tipping point. Demand is surging, and I think we're at a spot now where, I'm going to take myself out of my shot so you can see it better. All right, so accelerated computing and generative AI have hit a tipping point. Mr. Jensen Wang said, demand is surging worldwide against companies, industries, and nations. Now, what I thought was interesting was I heard one of these people talking about Nvidia a few days ago, and they said there's now demand from sovereigns, meaning countries are now, and it makes perfect sense when you think about it. Say you're some country like, I don't know, like like India or Nigeria, maybe not Nigeria, but mid-level Brazil. These countries have, if they want to go and spend $1 billion on an AI, initiative, they've got that much money. I mean, they're not they're maybe the richest countries in the world, but if they want to spend money on something, they can start throwing money at AI, and governments do this. They throw money at technology and science and different things like that. So it's interesting now is there seems to be an actual new market that we didn't even think of, which is that sovereigns now are going to start pushing AI. So I think it's one of these things now where demand is begetting new demand. There's an interesting note from the guy at, I think, Bank of America, is that AI inference contributed 40% of the computing mix. AI inference is correlated. This shows that when it's not being used to train AI models, it's being used to use the AI models, which means that now that there's more and more people using it, it makes sense when you think about it. When it's kind of interesting because now that the models are built, that required a certain amount of computing. But then when you really think about it, it's probably going to be 100 times more computing to use them because Microsoft trains ChatGPT. It takes so much time and money to do that. But then there's like thousands of enterprises and people who are going to use that, which now means that the actual demand gets actually exponentially higher. It actually accelerates as more people use it. Once that initial investment is made, it pays off in a sort of exponential way. So tight supply, which I thought was interesting, and low China dependence, which is interesting because if they bring these Chinese products out, they're going to actually have market for them. There's anything about Moderna. I think you might want to just check that out. What was interesting was they talked about some new products that they were entering in, not just vaccine stuff, but they have some other potential products that are coming online. I'm not going to get into it, but I think it's important. This Moderna report could be interesting. It has been a millstone around the neck of biotech for like a year and a half now. And if this thing turns around, that might actually be something that can support biotech. The Chinese are, they cut their their interest rate, just more kind of stimulus in China. Now, here's the thing that was interesting to me was that the Biden administration is delaying a push for electric vehicles. And so again, you got to, I think, just realize that the EV green energy thing for now is kind of is kind of dead, and there's a problem for Tesla. I mean, look at Rivian; it was a real, you know, really weak quarter in Rivian. So I think that pretty horrendous. So I want to just mention that I think right now we're moving away from the green energy thing, and I think that you know for people looking for secular growth now, I mean AI is so much more of a credible kind of secular growth than EVs. For a million reasons, and I think we're seeing that now. We never saw the kind of exponential enterprise-led volume in EVs that we're seeing for AI. I mean, the number of people starting to use it, I think, is going to be so dramatic, whether they use it directly or indirectly. So anyway, I think the EV thing we gotta be careful of in terms of, like I said, when a growth stock is broken, it doesn't usually come, screaming back. It usually can go through a period of difficulty. Here's the report on Rivian, Lucid, which also, bad numbers. All right, so here's a few things. All right, so UBS 5400 in the S&P is their new target. I want to just mention that. And it's interesting, they like healthcare. We talked about healthcare, so I'm not going to get into it again today. But they basically are saying, better earnings estimates they see. The Nikkei, Japanese market, hit a record high for the first time in, a generation. Pretty interesting, the Japanese market. So, I mean, it's interesting to see that because, Japan is one of those interesting countries. It's not an emerging market. It's a developed market, but it's not Europe. It's like its own thing. And we talked about Toyota on this call, and I think that the Japanese thing is actually really exciting and really interesting. It's historic. Again, we're entering history, in many ways. Like I said, we're talking about things now that haven't happened in decades, and that's kind of exciting because you have new discovery of stuff happening. I remember when I was a kid when Japan was on top of the world, and then most of my adulthood, Japan has been in the doghouse. All right, retail traders getting more bullish according to this article. I mean, that's just interesting. I mean, I just wanted to share it because I saw it. Another thing here, investor sentiment toward tech rebounds strongly. More of this sort of this widespread acceptance. Now, I think it's important to realize that this idea when everyone says something, then it's no longer necessarily like valid and stuff. And that might have some truth to it, but I would say is again, the breakout only happened like 2 months, not even 2 months ago now. So when the breakout is 9 months old, then it's a different story. And I think it's important to realize now that we are still in that phase when the party has started, but it's still, not done yet. It's like it's not too late. Kind of for that's the way a lot of people are viewing it. And historically, when you have moves like that, that is how the market functions. All right, so a few things with energy. There's this thing now apparently with more, risk in the Red Sea, with the Houthis. Also, I saw some interesting headlines that this was something where the Russians say that they're going to pump less oil. This was something where this guy Novak. Um, I don't know if he's their energy minister, who he is, but I see him quoted sometimes about energy. This was 2 days ago. Um, there's another thing. Russian crude oil exports apparently show that they're now complying. Now, Russia, remember, was overproducing. So the energy thing, I think, is out there, and I think we want to just kind of be on guard for some strength in energy. All right. So Citi is kind of off on their own island. They see a recession by the summer. I'm not sure what they see and why they think that, but they are on their own. But then S&P boosts their forecast for the GDP of the United States. Now, this is pretty insane. I'm sorry. Going from 1.5 to 2.4, I mean, that's a big deal. And again, like I've said, when you start to see people be really wrong, when you get these dramatic surprises, like we've seen on things like Nvidia numbers, a year and a half ago, again, it tells you that people's models are not correct. And I have said, and I continue to believe, that people are grossly underestimating the growth trend of the United States economy because they are not accounting for the diminishing of of, um, of global trade or the diminishing of globalization. They're not accounting for rebound in the housing market, and they're not accounting for also the fact that people are now in a spot where they can start adding leverage again and you can start to see that debt to income start creeping up. And as that happens, it incrementally adds aggregate demand to the economy. All right, conference board gives up hope, gives up on the recession call. So then that's another one of going from being worried to being positive. Oh, another thing here, Google and Alphabet here. I think yeah, Alphabet is really not doing great. The last couple of earnings reports have seen gaps lower, and I mean, Alphabet to me, I mean, it's kind of trying to hold here and stuff, but I think it's interesting also to realize this stock is nowhere near a high. It made this lower high here after a failed breakout to new highs, and now there's this thing about their Gemini model not working correctly. Now, this creates two possibilities. One possibility is that, you know, Alphabet falls behind and it becomes another just kind of dead stock. The other possibility is that they finally get their act together and this stock really can rally. So I think we need to realize right now that Google has this very clear narrative. It's kind of like Facebook was when it came out and they didn't get the mobile app working correctly at first. I think now that's where Alphabet is. And if Alphabet can turn itself around, I think it's something that we need to watch for now. So, in many ways, with Alphabet now, any headlines or analyst notes or things like that of people saying their model is really good or something comes out where their model beats chat gpt at chess or something and now it's better than Microsoft, that narrative is something that could turn around and become a positive. So I think we wanted to realize now that Google is suffering from this and we're aware of what ails it. All right, so this thing about inflation, Palo Alto, I think that the cybersecurity space now, and you look at it, there's a lot of signs of the cybersecurity space having kind of peaked for a while. These stocks traded high multiples, a lot of growth was priced in. They had a really poor earnings report. And what's interesting about this company is they are basically doing free products, giving, I don't know, they're eating margin. So it's the opposite of this thing I said about margin before. So when you see people eat margin and, kind of compete, trying to get customers, that is something that the investors don't like to see, especially when you trade at a massive multiple. And Capital One bought Discover again. Like I said, M&A has really not been a narrative. And when you look at things like financials and biotech and energy, potentially, retail, there is potential out there for M&A and activist investor stuff to come along. And remember, the next half of this quarter, the second half, the kind of going through the end of March, there's no earnings. There's less activity, less stuff happening. We are going to get PCE inflation next week, and Jerome Powell is going to be in Congress on the 6th. But we're entering this period of time when there's not as much macro information happening. So I wanted to just kind of go through those things. And all right, I got a minute. I want to show you this other thing I've got here, and I want to show this to you guys. Um, let's go to. I'm going to open up a new chart. This is a tool I've created, but it basically works on a principle that a lot of us, I think, use and we like, and that's the idea of moving average crossovers. So I'm going to go here and make this a daily chart of something like let's just do Apple, and I'm going to go to studies, and I'm going to go to add study, moving average exponential 2 lines, moving average exponential 2 lines. I'm going to add the 8 and 21, all right, because that's one that a lot of people use. I always basically do my color on these. I do that's a good color, like a blue, but then I do gold for the 21. All right, now hit OK. You can now see this. All right. Now I have this other indicator here, and this is included in your ELD. I'm going to studies, go to MAX days since. This shows how many days since the moving average crossed over. Now, what's cool is I actually made there's something with this study where it was saved the wrong way, so now I can show you how to fix it. So I'm going to just go ahead. If you look at this, it shows the 8 and the 21-day exponentials. This is going to show how many days since the moving average one crossed over the other. So we add it to the chart and see. I don't like how this looks. It's kind of ugly. And so I'm going to show you really quickly. I'm going to go to new application, easy language, and I want it to show up as a histogram. Now, the problem with this, the reason why it's kind of ugly down here is one thing is it's a line instead of being a histogram or, a bar chart. And the other reason, 1 second, sorry. Let me go to edit. All right, there we go. So here we go. Um, the other reason is that it's plotted on the incorrect axis. So I'm going to show you how to fix that. So what you can do is something like this. When a study does something funny is you go to properties, and then you're going to see, here's how it's defined. You can see on the chart style, it's a line. Let's make it a histogram and let's make it thicker. Now let's go here to scaling, and you'll see that it goes on the same axis as the underlying data. Let's change that to right axis and subgraph 1, and now hit OK. Now I'm going to hit F3 to verify and save it. Everything is fine. Now I'm going to remove it from this chart and I'm going to re-add it. Studies, add study, MAX, days since. Okay, and now it's going to be, should be a nice histogram at the bottom. So what does this say? This basically says that the 8-day moving average crossed under the 21-day back here, and this shows the number of days that status has been true. And this was when it was above. So what's interesting about this is this allows you to find stocks that have a recent cross and maybe have an opportunity to do something the other way. For example, if there's a bullish cross, then you can actually see where it can show a bullish change of direction and things like that. So I'm going to show you very quickly here a way that you can use this. I've shown how to use it I've shown how to use it with radar screen, but I'm going to show you how to use it in scanner. So I'm going to go to scanner, new application, scanner. All right. Hopefully you guys can see this okay. I'm going to go to create a scan, and I'm going to just call it, I always give it today's date, 2024-0222, MAX days, something like that. Then I'm going to next. I'm going to include all stocks, but what I'm going to do is I'm going to make sure I include stocks of like 10 billion or more. That way I'm not dealing with a lot of small companies. All right. Then I'm going to go to add a criteria. And the first thing I want to do is I want to basically, I want to see companies where the 8-day, I'm going to go to moving average exponential indicator, and then I go to moving average exponential. Add that, and then I go here, and then this one, I'm going to say greater than, and then I'm also going to say moving average exponential. So here's what I'm doing. I'm looking for stock for the 8 days above the 21-day. That's easy to do. Moving average exponential, moving average exponential. Now I got to make sure it's set to the 8 and 21, and it's not. It's set to so I'm setting that to 8, and this is set to 21. So this is going to find stocks for the 8 days above the 21-day. But now what we want to do is you want to say MAX days since, and then we're going to do is we're going to set it so it is less than, say, let's just set it for 55. And that'll just bring it, and this will, we can sort on it. So don't worry, I'm doing too many. And then I can also go to price, percentage change, 5-day, less than 99. And the reason I do that is because it allows me to then sort the price. So I hit run. Running, and this is going to now bring up stocks that had the crossover in the last 55 days. So if you look at something like Nvidia, you can see on Nvidia that its value is 48. And right here, you can see where the cross happened. So it's interesting how it turned positive, and then magically it started rallying, about 14, 15 days later. All right, someone was asking about Carvana. I'm going to quickly look at it. I have no idea on a name like Carvana. This is kind of a weird balance sheet story. Um, hmm. Didn't give me any results. Well, it should have. Sometimes during the day, I did it earlier actually, and it did give me these results. Sometimes when you do something during the day that requires a lot of data, it doesn't work super well. So you can run this at night. I actually did run it earlier, so you can see how it works. So look at a name here, like Datadog Datadog, for example, DDOG, and you can see on this one that it had its MA cross 30 days ago. See, and so this is an example of one where it did work. I apologize. In the middle of the day, I think the data system, it just doesn't always work super well. This is something that you can think about doing after hours. I have this set to run at night, but I wanted to show you how to do it. So here's some examples. Datadog, I'm just, and the thing is, we're looking at now, it's looking at who's down the most in the last week. So we're just looking at like little pullbacks, something like, I don't know, I'm looking here at some of these on the list, like, I don't know, Agilent Technology. I'm just looking at some of these. You can see they're just kind of grinding sideways. This company reports earnings soon, but DKNG, for example, um, you know, had this rally. Now it's kind of pulled back to hold. But you can look at the names that had the cross relatively recently, like, for example, in the last 8 or 10 days. So look at a name here, for, like, for example, BP. This recently had the bullish crossover, and it's kind of sitting and kind of skulking. And it's interesting. This is a name, if we do start to see some strength in energy, this might be the sort of thing that people, it's consolidated in this tight range, and this is sort of thing that could start to, have some interest. So anyway, those are the main things I wanted to show you guys today. Um, Remember, like I said, the thing that kind of, now that we have the AI news, let's just take one last look at Microsoft. Kind of has held that level. So I want to just kind of show at this point, I mean, this is now a period where we are getting signs of things broadening, and the areas that seem to me where where things are potentially lining up are going to be biotech potentially and energy in the near term. Those are the areas that are starting to show some interesting strength. Like I said, on a trailing 1 week basis, even with today's big move in technology, energy is actually the top performing sector in the last week, and there have been, some different things that, that price action we started last week. So, and then the new high I said on the biotech has that potential to kind of, you know to to set off some alerts on people and start realizing, wow, it's closing on a high level on the weekly chart. So hope you guys have a great week. I'll see you again next Thursday. Thank you much.